Well, welcome back, everybody. First of all, I want to just, say from Sarah and I that we're very, saddened to say the least. No other way to say it. It's unspeakable what happened down in Texas. Obviously, as you guys know, we have a lovely 10-year-old daughter and just can't imagine, what people are going through that have lost their daughters and other loved ones of other people that have passed away. So we are very much keeping Texas in our heart and, of course, love Texas every day of the week, all the time. So for all of our Texan friends, we support you. And for those that lost people, you are very much in our prayers. So as we kick off into this evening, I wanted to kind of start off with where we were from back weeks ago, right? It's important to remember where we were at so we can think about where we're going. So you recall, weeks ago we had, these two support resistance bands that I had identified. That led to the coiling that we saw. We were identifying the coil. In fact, I drew this little graphic many times, right? And so we were looking for the breakout breakdown with the bullish momentum like in the TRP here. Probabilities were high, of course, especially since nobody was expecting it, right? There was so many people that were very negative in nature. There's a lot of reasons to be negative, I understand, but the markets always climb the proverbial wall of worry. And so what happened here is we took off to the races, to the upside. This led to some exciting moves, up here, and we walked through that whole process and that journey and what we were looking at that time and the key levels. Well, one thing that some of you may not know, if you weren't here on that Saturday where we had done a class, it was right back over here. We had done a class on the Saturday, the 28th of June, and so we went ahead and kind of updated at the very end of the class when nobody was kind of there anymore. We were just doing a Q&A, so it's just instead of thousands of people, it was, I don't know, it's like 500, 600 people, something like that were left. But we're like, hey, look, you guys stayed, so I want to share something with you. And so, what we did was we talked about at that time how we were at actually a very key resistance level. And what that was we just pull it on up here real quick, the TRP target 1. As of that Friday the 27th, so Saturday the 28th, we did the class, I showed everybody how we hit target 1, and then I identified, here's target 2, here's, target 1, how we were at it. Well, basically what happened though is we spent the next 4 days, or 3 days sitting there. Then we rallied up to the midpoint, and then we got, kicked back off from there. You'll notice that we locked in a negative divergence back over there right when it was hitting so here's, making the higher high in price, but not the higher high in the indications. And so we went ahead and we got stalled out there with that negative divergence that locked in. And so we're under pressure. We have resistance from the midpoint. We have negative divergence, so we're under daily pressure. At the same time, we have massive rising support that we held on Monday, and now even today held on Tuesday. All of you that have WealthCharts have access to this powerful tool right here, and you can see that we went ahead and have been trading right there at that key support. So in summary, whether it's our TRP tool where it's bullish support, we have the Champion Trend Pack bullish support, we have bullishness, underneath, but we have pressure of overhead resistance right up here, double resistance, the midpoint and the negative divergence all taking place there. So armed with that information, though, what's important to understand, walking in the door today, we are basically sideways and technically damaged, meaning the market, going from the bottom end of the channel to the top end to the bottom end. And by the way, there's great ways to identify that if you don't know how. If you go into WealthCharts here, you'll see under here the more exclusive indicators. For all of you that have access to the exclusive indicators there, we've got the technical damage tool to help you identify some of those different things. So as we look, walking in the door, we knew we were basically sideways there. The hourly chart was basically sitting here right at the zero line, but remember, the daily was very strongly up and rising support. What does this mean in English? We've got no trend on the hourly. We've got support underneath us, but resistance above us. So we're in kind of what we call a kill zone. And in a kill zone, that's where we find things whipping back and forth, right? That's why we call it the kill zone. You got support underneath of us, and you got resistance on top of us, and everything's shooting back and forth there. Not a great place to be if you're looking for a trend at that time, right? Just like over here, we had that trendless area that was coiling up, getting ready to break out again. So what happened was that meant that, like this morning, when people were very aggressive to short, right, we're hearing about tariffs again, and Iran heating up again, all these different things that we're hearing about in the news once again. And so, of course, walking in the door, people are very excited about going ahead and shorting after the big run. The problem is, unless you had these tools, you're not seeing that, well, there's support right below us, and that there's bullishness, overwhelming bullishness still underneath of us. And so what happened is that caught some people short where they were getting short and then getting stopped out. And then it's like, okay, it's going back down. This time it's going to break out for real. Notice that it went ahead and made a slightly lower low, which actually made a positive divergence in WealthCharts, and it popped right back up again, right? And so the point is that these are ways, and when you're looking at these moves, what's important to understand, I know these moves don't look like much, but in actuality, that went from the 850 level all the way up here to the 940 level. So about 90 points or $1,800 a contract in that 15 minutes. Then it came right back down again. And so if a breakout trader were to come in there and want a breakout trade and you were ignoring the positive divergence, well, then, you would get short then, somewhere in that 850 area, 840 area, and it turned right around and whipped right back up again, well beyond a retail trader stop loss. And the way to avoid that kind of thing is take a look at those higher time frames, like we always teach, like I taught in that class a few weeks ago. The hourly chart, again, sideways and just mute. Not bullish up here, not bearish down here, just mute. So the hourly chart, zero trend. The daily chart, strong trend to the upside, but negative divergence. And again, that creates the kill zone effect. Okay, which means a lot of chop. So as soon as you think you're going to have a trend to the downside, it's likely to spike up. As soon as you think, okay, that's it, now it's going to break out and be another one of those big rallies, it's likely to push back down. That's a bad place to be, if you're looking for a trend and you're not. So even now, as I'm sitting here making the video, you can see the whipsaws back and forth, 14, 15 point ranges, just here, as I'm shooting this video. So the point with all that is what we really want to see now is I want to start to, we've got this key support underneath of us, which was the resistance over here. I'd like to see either, if we break down below that, then we look for opportunities possibly back down to the 22,600, 22,550 area into the NASDAQ. If we can hold this area, wonderful. Let's push back up. We're going to have to eat away at this 23,086 area, which, like I said, these numbers don't reprint. These were the same numbers I showed you on that Saturday. And, we saw those levels in advance, and those levels are very important to us right now. It's the power of that, TRP tool. So where we're at, support and resistance, I'm going to be more bullish, between this 22.9 area and 23.100 area, basically 23,086. Be looking for longs there, especially if that hourly chart can start to get pushing back to the upside there. And then from a bearish perspective, we get down below this 22,750 area. We'll look to see if that hourly chart can get down with us, and of course the 1 minute, 5 minute type charts, and be looking for the short term shorts there as well. So that's from an intraday trading perspective. From a bigger swing trade perspective, we're going to go ahead and actually share some of that with you as well as we go into next week's big summit event. So I'm going to be teaching a lot about some of these different strategies that are available to anybody that has access to WealthCharts. Some of my other strategies that people should be thinking about regardless of who you are and what you trade and how you trade. And of course, obviously after winning those 2 additional competitions over in Italy, I think that and those were very volatile times. I think right now focusing on these kind of market moves is very important, because there's going to be, it's not just the money you make, it's the money you keep in the middle of this as well. So I want to share, where the market's hot, where the market's not, more what to look for there. So feel free to join me. If you go to wealth365.com/BBT, wealth365.com/BBT, I'll be doing multiple classes next week. I've got formal classes during the daytime on certain days of the week. And then I've got the evening sessions, I don't know what they call them, like Meet the Champion or whatever they call the sessions there. But bottom line is, it's just me, it's Rob. Come see me. And love to answer, more of your strategy questions, help you with whatever you need help with. Okay? So go to wealth365.com/BBT and keep in mind these key support and resistance areas here as we go into tomorrow's trading session. Of course, we got some economic data later in the week, and we have different FOMC minutes and different things that'll be taking place to keep the market active. Just don't get caught in the whip zone here. If you're going to trade in these short-term areas, please remember to have tighter stops so that you're riding the profit and then not getting caught in the whip zone and giving back all those profits and potentially turning the winner into a loser, which of course is absolutely devastating psychologically, and we want to avoid that at all costs. Okay, so have a great night. I'll see you at the summit next week. Again, wealth365.com/BBT. And again, to all of our friends in Texas, Sarah and I are absolutely thinking about you, and you're in our prayers. And I just want to close with that thought, because that's the most important thing tonight. So good night, everybody. Take care, and I'll see you shortly. Bye-bye for now.